Hey, welcome back, traders. It's Friday, November 24th, 2023. Time for a general market update. First of all, I just wanted to wish everybody a happy holiday. Hopefully, everybody spent some time with their family and friends and had a really great time. The current market indices, and I'm recording this almost at 11 o'clock Eastern time, current indices are either slightly up or slightly down on this shortened session, which closes at 1 p.m. Eastern. So again, the reminder, the presentation is by Rain King LLC, and I'm an amateur individual growth stock investor, but I've been investing in growth stocks for quite a long time. So our agenda is we're going to look at the NASDAQ historically and lockout rallies. Then we're going to look into the specific indices as we see them today. We'll get into the trend monitor, the power trend, and then we'll wrap up. So I wanted to go into something called lockout rallies. So lockout rally is really where the indices take off and they really don't pull back much. They just keep going and it's difficult to get in as a trader. So I wanted to pull up, this is the 1998 bottom, which actually had three waves down in a very quick bear market. And you'll notice here that, this made a move, very strong move. It actually was an 85% move over only 78 trading days. And what I wanted to point out is here's the follow-through day, but you'll notice these green tags where there's multiple subsequent follow-through days, 1, 2, 3, 4, showing you that there's continued buying and follow-through buying, which is important. I also wanted to point out that these moves aren't completely smooth, and there were actually 1% drops, 2% drops, 3% drops on the way up. You can see a cluster of them right here at the old highs. So multiple subsequent follow-through days is important in these kind of lockout rally, which are hard to get into if you're underinvested. Here's another example from 2018 bottom. Again, very similar, three waves down. You can see a very powerful rally up, hardly any pullbacks at all in here. And again, look at the multiple subsequent follow-through days. We have 1, 2, 3, 4 very strong days of follow-through buying. Here's a cluster of the names that were breaking out at the time. And again, powerful move was 32% over 85 days. So again, that's another one of these lockout rallies. So now I also wanted to look at the context historically between the 2002-2003 bottom and the current bottom that we had, which started in October of 2022. So on the left is the 2003 market. And you can see here what I'm trying to point out is the first push off the lows was about a 37% push. And it got ran into resistance around the green line here, which is the 200-day moving average. It corrected in three waves down, almost 17.6%. And then you had this really what we'll call a lockout rally. You can see a very powerful rally that was contained by the 50-day moving average, and it ran 72% before we had a much more substantial correction up in here in 2004. So looking at that is just a comparison to what we have. Here's the market lows late in 2022. Our first push off the bottom was about 41% in gain. The difference, though, is we got above the 200-day moving average. Then we've had this corrective period of three waves down. These are weekly charts, about 12% on the NASDAQ. And right now we're pushing right back up to these previous highs in the NASDAQ. And we don't know, is this rally going to keep pushing or are we going to fall over and fail? But there is some interesting comparisons. And, sometimes the market can go farther than you think with these lockout rallies. And everybody's waiting for it, saying it has to pull back because it's overbought. Really strong rallies don't pull back much. So now let's get in specifically to today's indices. So on the left, this is a Market Smith chart of the NASDAQ, a daily chart. And here's the follow-through day we had in early November. And look at some of the similarities. We've had this pretty much straight up push in the NASDAQ. And I've noted the subsequent follow-through days, 1, 2, 3, 4 of them, which is very similar to these lockout rallies I showed historically in the NASDAQ. Also, we had the power trend turn on Monday, and we'll speak about that in a little bit more detail. But the power trend is another positive attribute to the rally. Now on this chart, I've just blown up the daily chart of the NASDAQ, and I've started to plot the leading stocks that are breaking out. Now, this is not an all-inclusive list, but these are just some of the major ones which are showing some great action. You can see here's the follow-through day. We had a number of stocks breaking out before the follow-through day, Annette, Crowd, Nutanix, and then you had, as we came up in this rally push, you can see all the other names that are starting to break out. What I think is really, really positive and constructive is we're seeing mega caps break out, Meta and Microsoft, but we're also seeing new issues and IPOs breaking out, which have colored in blue. Coursera, Raise, Shark Ninja, ARM, Duolingo. So seeing a mix of small growth, IPOs, and the mega caps is a very encouraging sign. Now, in addition to that, watch list names that are in bases and getting close to breaking out are some names you keep an eye on. MDB, some of the housing stocks are right up against new highs. You can see this list. It's a combination of IPOs and some much more bigger companies, NVIDIA and Tesla. So it's a pretty target-rich environment right now. So this is the power trend, and I believe Mike Webster was the one who really captured the rules for a power trend when he was with IBD. So let's just quickly review this. A power trend turns on when all these conditions are met and you get a rally. So the 21-day is above the 50-day for at least 5 consecutive days. The index closes up on the day. The 50-day moving average has to be in an uptrend for at least 1 day. And the index low has to be above the 21-day for at least 10 consecutive days. So what this is really saying is when you get a strong trending market, which we haven't had very much in the last 2 years, you get a strong trending market, the odds are starting to get into your favor that this might become something more lasting. So I just pulled up an example. This is from April of 2009, coming out of the great financial crisis. And this went on for, what's that, approximately 9 months or so. So I've just plotted it. You can see here the power trend turns on. You know, the power trend stays on as long as that 21 is still above the 50, which is the purple line here. And you can see, even though we broke the 50, the 21-day in purple is still above the 50. So the power trend stays on. And it's only when the power trend will turn off is when the 21-day is below the 50-day and the index is down. So the purple line goes below the red and the index is down. That would turn the power trend off. So we just had one of these trigger on Monday. Also very, very important piece of information about the quality of the rally. Last week I showed this and we were monitoring the breadth as things were evolving. So I wanted to just take these notes and put them on a chart because I think it's actually even more easy to see the transition. So again, this is the S&P 500 on a daily chart. Here's the follow-through day. And before that follow-through broke out, we had monitored that the breadth was starting to show improvement. We had some better days in the S&P. Then we had the follow-through day. We had more better breadth than the index, which was encouraging. And then we had this period where the index kind of slowed down and we had what I call bad up days, where the index was up slightly, but the breadth was not good. And that was a cautionary sign. But coming out of that, we pushed higher and we got this very, very powerful day last week where the breadth was 10-to-1 advancers over decliners. This day negated out these bad days. And you can see we've had follow-through breadth improvement, 1, 2, 3, 4. So the breadth under the market is showing more strength than even the S&P index. So this is exactly what we want to see, very constructive. So here is the S&P with the percent above the 200-day moving average and above the 50-day moving average. So the 200-day on the left, you can see with just more incremental improvement. We're starting to improve. We have 56%. Now on the right side is above the 50-day moving average. You can see we've gotten up to 74% above the 50-day, which is a really good sign. Now you can see when you're in this yellow box, we're back to the areas where we had the rally in June and July, where we started around 50, 60%, and we actually got up to almost 90% above the 50-day. So much healthier, and it compares similar to the rally we had. So in conditions continue to improve, which is another plug for the market. So let's look at our trend monitor. So the things that we keyed on, We have a follow-through day. It's working. We've only had one distribution day, and the power trend is now on. So that's another plus. Bases, breakouts, and setups. There's a lot of names that are working, including new issues. So that's also very, very positive, and there are names still setting up in bases. Net new highs. We are starting to see net new highs on the NASDAQ. We've had at least 3 days. So that's really encouraging. We were not getting that for a couple of weeks. And the NYSE is also showing some net new highs. So that's really, really a piece of new information in the past week that's positive. 3 consecutive days, at least above the 20. We were well beyond that. We have a power trend, which is at least 10 days above the 20 days. So that's all constructive. The breadth, we just mentioned it. We're getting more good breadth days this week than we had last week. Constructive. And the volume, we're seeing multiple subsequent follow-through days with volume. It's exactly what we want to see, and all of this started on the November follow-through day. So the trend monitor is the trend is up. We should be participating in the rally, and everything is lining up pretty well. Now, I wanted to take a little educational point is the importance of watching your average cost. It's very easy to get too excited and start putting on too much exposure. Now, if you're trying to build a bigger position for a major move and amidst this trend, it's really important to watch your average cost. This is a lesson that I personally had to learn numerous times, where I added to positions way too quickly, way too heavily. And then when you get a normal pullback, you're going to be under a lot of pressure. You're either going to hit your average cost on the pullback and you're going to be under pressure, or even worse, you might even hit your stop. I can't tell you how many times I added too quickly and got stopped out, and only to see the stock run. So it's a really important lesson. But it requires that you be patient. You know, you have to be patient, and you have to plan ahead. If you're going to make an additional buy, calculate exactly where your average cost will be and draw a line on the chart, and then anticipate that the market, if it does pull back X% and you're in a growth stock, which could correct 1.5 to 2.5 times, you know, will your stop or your average cost be hit? You want to have good cushion if you're a position trader trying to build a bigger position for a major move. So let's look at this graphically. So this is just a graph of a chart. Let's say this chart, we're forming a base, a cup with handle base. And in this example, I've just drawn a downtrend line where you might want to buy the stock. So let's assume you make your first buy in the handle area at $88 per share, and you take a 2.5% position side, a fairly small position, and the stock starts to work. Stock runs up, and now you get really excited because you say, wow, this breakout is working. So the stock moves up to almost 110, and you decide that you want to basically really increase your size. So, you know, the problem with that is you are very extended from the buy zone of that pivot. So you're extended, and when you make the purchase, and now you can see a normal pullback to the pivot zone is putting you under a lot of pressure, because your new average cost of these two buys is at 104. So you're in trouble here because you'll get a lot of pressure because you bought extended and kind of really tripled the size of the position. Most likely you get stopped out, in this case with a 4% loss on a normal pullback to the pivot. And, you know, we should note that 40% of all breakouts will pull back to the pivot. That's really normal. So again, this situation is something you want to be aware of. And if you do get stopped out and this happens, it can be very painful if you don't either rebuy the position or the stock runs away without you. Summary. So let's wrap up. Again, really quickly, follow-through day is working. There's only one distribution day, and we have a power trend that's kicked into place. Really positive. Everything's in place for the trend. We're in a seasonally strong period for the market. We talked about the leaders. The leaders are up and out, and I showed you some of those leaders, and there are more names setting up. Exposure levels should be somewhere in the range of 50 to 80% is what I believe. Again, if you're more aggressive, you may be more exposed. And if you're more conservative, you may be less exposed. You have to do what's right for you. But we are getting continued positive feedback from the market. I like to keep some powder dry. So when we get the pullback, I can add to positions, and I've got some powder dry because I'm not fully invested yet. Now, we do know that it's possible that the market might pull back. We might get a pause. that would be completely normal. And we want to really examine that pullback carefully to see how much do the leaders give back of gains. Do they begrudgingly give back gains, or do they immediately start to roll over? We want to monitor distribution days. We don't want to see a cluster of distribution. So we're all going to be looking for how this pullback occurs, and if it's a quality pullback that gets bought up, or do things roll over? We have to be open to both sides. So the quote of the week, or at least the message of the week, is stocks don't move, stocks are moved. Now, what it really is talking about here is institutions move the markets, and all we do is we follow them. We hop on board when they're buying, and they're moving the price of stocks up. And if they're selling in distribution mode, we have to get out of the way and go back to cash. So stocks are moved by the institutions. They're not moved by retail investors, so we have to follow. Well, that's the general market update for November 24th. I hope everybody has a really great weekend. And here's where you can find me on YouTube, X, and email. Thanks, everybody.